Good morning. Welcome in to Everything Money. You don't need to send me the link, where we live rent-free in all of our haters' heads. All right, guys. Good morning. Futures are up a tick. Smash the like button for me as we get started. There's really not that much news out there, so we're going to do a lot of stocks today and talk about whatever you guys want to talk about, of course. And we will go from there. Let's see what we got. S&P futures up. So this is my first day of the trading week, the way I look at it, because yesterday, when you have the bond markets closed and then everything is going to settle today, I mean, what's the point of having the market open if you don't have the bond market open? So the earnings calendar is going to start heating up tomorrow because we are getting into earnings season. And of course, it's going to kick off with the big banks and whatnot. So that is that. All right, where should we start today? Let's start with Jerome Powell. Complications over in D.C. More complications. All right, so let's see. Fed Chairman Jerome Powell is at odds for a renomination. So if you guys remember, there was the scandal that happened. This was an appointment of the previous administration. So usually a new administration doesn't like keeping the old. But complicating his path to a second term, a scandal that engulfed at least three senior Fed officials centered around big financial bets made in 2020. So nothing that they did that has come out so far is illegal. It's just very frowned upon. Fed Vice Chairman Richard Clarida, the central bank's number 2 official, also caught attention for rotating millions of dollars out of a bond fund into a stock fund in February 2020, right before the Fed started taking emergency action. That doesn't sound very kosher. Though Powell is still the odds-on favorite, there's questions that are coming into play, and there is a who is it? Lyle Brainerd. She seems to be the front runner right now. Lyle Brainerd. Also, she's the head of the committee tasked with the Reserve of Bank Affairs. That's the committee that's responsible for basically keeping all the regional Fed presidents in check. Well, if we're looking and seeing what happened with Rosengren and Kaplan, she didn't do her job. So clearly she should be the front runner. Powell still appears to be the top candidate for the job. Betting website predicts that Powell is leading considerably over Lyle Brainerd, a favorite among the group. So he was at Capitol Hill. Let's see. Asked on October 5th by a press pool if he had confidence in Powell as Fed chair, President said thus far, yes. So that's what we got going on with that. With Powell, I personally think he's going to probably stick around. But I could also see them bringing in Lyle Brainerd also because of one reason, and maybe you guys can figure it out, but I'm not saying it. Where do I want to go next? Jumbo home loans. So jumbo home loans are loans in the majority of the country that are over $548,000. And at this point, we've hit jumbo home loan originations that have have they superseded? They're near pre-2008 levels. So originations of jumbo loans, U.S. residential mortgage exceeds the conforming limits set for the housing giants Freddie Mac and Fannie Mae could hit $550 billion this year, a level not seen since the run-up of the 2008 financial crisis. That is according to Bank of America researchers. And if you look at this little chart right here, you start to see the trajectory of these jumbo home loans, and it has certainly skyrocketed in 2021. With that being said, housing prices are also really, really high. So we have to look at it from that aspect too. Yes, currently it's about $548,000 for single-family residents in much of the United States, closer to $820,000 for a jumbo loan in New York, San Francisco, and other high-cost areas. The level will increase annually. Several public mortgage lenders, including PennyMac, in recent weeks have said that they would offer borrowers confirming loans up to $625,000, a level that is anticipated to match the new federal guidelines for 2022, which are expected to be announced in November. So, when in doubt, raise that number and make it look like it's not as bad as it is. The race to make large loans on expensive homes comes as property prices have surged, almost up 20% from a year ago. And then we are going to see how everything's going with the credits because the banks are going to start reporting tomorrow. Let's see, who reports tomorrow? JP Morgan's going to kick it off tomorrow, and BlackRock. I don't think BlackRock does a lot of loans. And then Thursday is going to be big. Bank of America, Wells Fargo, Citigroup, Morgan Stanley, U.S. Bank Corp, and then Goldman Sachs will hit it with on Friday, and PNC and Schwab, but they don't really do many traditional loans. So that's that. So we're going to see what's happening. Okay, next, housing market has jumped, but the whole jumbo and capital gains hasn't moved in decades. Maybe so. All these people, you guys are talking about meat. I'm not talking about meat. I'm not talking about meat yet. Heating prices. The sky is the limit for heating if we get slammed this winter. So get your blankets ready. Get your oven mitts ready. Man, I don't think that hype people can afford oven mitts anymore with the abuse that they've taken. If winter's bad, the sky is the limit for natural gas prices. We are dealing with theoretical prices at this point because everything is already at record highs. We don't see the release valve, and we don't have a history of it, just like we're seeing in the entire overall market and economy right now. We're in rare territory. Natural gas prices are so high that consumers are switching to other sources. Natural gas prices, according to this person from JP Morgan, said that they could double from this current level. Brent crude went to $84 a barrel last night. It was 83 yesterday or over the weekend. When you head into winter with the critically low inventories, the potential for a crisis is high. So if you look at this little chart of the oil companies, Chevron, can't remember COP, ConocoPhillips, I think, and Exxon, you could see their trajectory that they've had. I mean, look at ConocoPhillips, geez. It's up 20% in, this looks to me like just the end of the year. So, cray. All right. AT&T. So AT&T, guys, keep a watch on this one. They're doing a big-time restructuring that's going on with AT&T, and it looks like they're getting back to basics. They realized that expanding themselves too far was not working for them. They have tons of debt they need to start paying down. They should probably use some of that. I mean, they pay an incredible dividend, which they cut. I believe they cut. Check me on that. We look at so many stocks, I just can't remember. I believe they cut the dividend. We're just gonna have to wait and see how this one plays out, because of course, remember, they did their spin-off to do a merger with Discovery. So they're kind of let Discovery take a part of that business. And then of course the deal that they had with DirecTV, that was a disaster. They took a big write down on that. So they're admitting their wrongs. The AT&T, to me, we were talking about it right before the show started. Companies that, to me, I always look at return on invested capital, and I think that that's a very, very big part, because I'm not going to go and look at management style and management CEOs and read into their history, because I don't really think it helps when you look at companies that are this large. What I do care about is the return on invested capital and how well they do it, because that gives me an insight into how management goes about investing money. Going and spending, AT&T is notorious for just acquisition after acquisition after acquisition. And you can see that has come to fruition, and it's terrible. And the last couple of years have been very bad for them because they just keep doing all of this nonsense. Hello, Matt. So with that being said, I'm glad that they brought in new management. They're going to try to unwind everything that's been going on and maybe bring it back to normal. I mean, AT&T is down 16% over the past 5 months. That's incredible. But there's still skepticism about the company's future earnings power and its debt reduction and dividend payment abilities. Well, they cut their dividend. So they're going to be slimming. They're going to start looking towards they're going to start getting back to their basics, focusing on telecom. And I think that's a great decision for them. So keep a watch on this one, guys. I think it's I think they already did cut their dividend, Coco. They will cut their dividend, abandon ship. Well, if they cut their dividend and start reinvesting it or buying back their own shares, why would you abandon ship? To me, I had this conversation with Tim and Paul yesterday in the gym. So you look at a company, for example, that pays an 8% dividend, but maybe they can't comfortably afford it. I'm not just going to go buy a terrible company like AT&T right at this point. Go buy a terrible company just to collect the dividend. That's just dumb. That's like going to the ice cream store and all you want is a bowl of cherries, and you go in there and say, I'm going to buy an ice cream sundae just so I can get the cherry on top. What are you doing? Just go buy a cherry. It doesn't make sense to me why people put together a dividend portfolio and include in that terrible stocks, terrible companies that don't make any money because they pay a dividend. It doesn't make sense to me. It does not make sense to me. I understand that you want the cash flow, but if you're picking companies that are terrible, like AT&T, what are you doing? What are you doing? So, when you have $300 billion in debt, what do? Well, you go make disruption, obviously. Evergrande is going out and they're going to make their own EV. So go buy their shares. I mean, this is just YOLO it, baby. Electrical vehicle, unit of embattled Chinese property developer Evergrande said its first car will roll out of production next year. Okay, that sounds good. Shares. So when you're billions and billions in debt, what should you do? You should go and just put it into a business where you're just going to create tons and tons of more debt. Shares of Evergrande were up 10% in morning because of this announcement. Evergrande has not delivered a single vehicle to customers yet, but it has lofty ambitions. It previously pledged annual production and sales of 1 million cars by 2025. Newsflash, Tesla doesn't even do that, and they're a good company relative to the rest of the EV market. The parent company Evergrande is struggling to pay off $300 billion in liabilities. The automaker is entertaining an extremely competitive electric car market in China, which will face up against NIO, XPeng, and established players like BYD and Tesla. So, I do think that this is disruptive. Now, this is a sweet article. Don sent this one to me. October 30th, 2020, supply chain whiplash, Santa is going to be late. So it's so funny to look back and see what happened. Let's see what we got. The entire retail world is giddy over customers' large appetite to shop despite the contradictory consumer trends. So remember, this is 2020. Even if the holidays so it's funny because I was looking at a story and it was literally the same thing that was said in this article. So I read it. I said to everybody in the chat, I said, this is boring. Don sent me this one. It's incredible. Even if the holiday forecasts are modestly close to target, suppliers' inventories will not keep up merchandise and will likely arrive late, disappointing consumers. The point of this is this happened a year ago, almost exactly a year ago, and things have not gotten better. In fact, they've gotten worse. So people that are saying that this is temporary, it's only been around for this long, that it's been around for over a year up to a year at this point. So why don't we pump the brakes on saying transitory and this and that. The industry target for deliveries is 96 to 98% on time. Those ranges are going to slump to 80%. You have United States Postal Service, UPS, FedEx, all increasing shipping costs. I talked to United States Postal Service yesterday. They're increasing their shipping costs through December 27th from now because they're going to be shipping more. Food shortages are also a thing that's still going on. Beyond consumer disappointment with late order fulfillment, the real tragedy has been small businesses suffering. It's as if we're reading an article that just came out this morning, and it's a year ago. So look at history. These people are whacked, just whacked. All right, follow us on Instagram. Excuse me. Mo's about to receive his Tesla. They are on time. They're not on time. They're not on time. All right. And Matthew Jones, who said that? Yep. Phenomenal comment. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, at Seth Kirchanen. And let's go here. I just want to take a brief look at the yields to see if they upticked at all. Yeah, they're in the 1.6 range. Of course, we already did this. If you want to join our software, $28 a month gets you all the software, 8 pillars, all financial data, 23 years of financial data. It's really awesome. And then, of course, stock analyzer tool and everything else. If you want to join the Bid and Ask Nation, $78 a month gets you that. $500 a month gets you into Paul's Super Shorts, exclusive tier, access to me and Paul, basically talking about our investments when investments are... It's hard. This market sucks. That's all I have to say about that. If you want to do a one-on-one session with me, $750 will get you a session with me, 1 hour Zoom call, talk about whatever you want. I did a great one last week on whatever day that was. I think it was Wednesday. Yields are flat. And then if you want to do anything with Paul, $10,000 for 4 hours of his time to analyze a real estate deal if you're buying it. And that'll probably help you a lot in that market. So, all right, let's get into some stocks right now, and we will go from there. And guys, smash the like button while you're at it. We have 67 likes. It's kind of pathetic. Not gonna lie. The dislikes are gonna catch up. If you don't like me, at least help us out. I mean, you come here every single day. You literally come here every single day. You hate me so much that you love me. So, if so, please smash the dislike button. I mean, clout is clout, baby. Come on. Next. Where was that? I just saw it. Okay, let's do Baba real quick, just because I want to hit you guys with something. So, all right. So I'm going to pull up a line chart here. And I'm pulling this up because we haven't gotten a pullback yet. So as this thing just keeps going higher and higher and clicking up, to me, it's looking to be flagpole-ish. I mean, see, you had a very similar thing up here. That was a flagpole. It was a very similar thing up here. So right now, we're kind of getting that flagpole. I would really like to get this thing. I do foresee a pullback. Bottom line, I foresee a pullback. We're getting really high on the daily stochastic. I really do foresee some kind of pullback coming on, and we'll see. All right, Micron. Do hedge funds hate momentum traders? Why? No, I don't think so. There's a lot of hedge funds that are actually set up for momentum trading, and those are your quant funds. yeah, those are your quant funds. And you'll see when you start to get when you start to run into a moving average, especially on a big volume day, as soon as, I'll just draw on here, as soon as the stock price, for example, let's say you were up here, as soon as that stock price hits the 200-day moving average and it goes 1 cent below, you will see a flush of sales on that stock, because that's the quant funds coming in, and they're set. Their algorithm is set. There's nobody in the office. Their algorithm is set so that once it breaks certain support resistance levels, the trades will be executed. You'll see it the same way going back up. That's why you'll typically see days where when stocks are down big, the next day they're up really big. It's because they'll cross these certain points, and the funds will go ahead and sell them. And yeah, it's great. All right, let's see here. Nick, that's funny. All right, so that's Micron. Oh wait, I didn't even do Micron. My bad. Let me do Micron real quick. So it is a downtrend. It looks like we're holding some kind of support right here. You know, this is really beaten down. You have bad volume. If you want to do anything with this one, I would wait until it becomes a swing trade. But outside of that, I would probably just throw this on a watch list. Maybe throw it on a dog stock watch list, even though it's not necessarily dog. It's not totally a dog, but it's getting doggish. It's becoming doggy, and it's about to be a good boy. Bum, 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 boom. SPWR. SPWR. SunPower. I think I looked at this one yesterday. So SunPower is looking pretty good. So we had up, pullback because of the gap, and then it's going up. Hold on a second. I have never had to pull up so many line charts in my life because of all of this nonsense that's happening with flagpole patterns. Yeah, this is looking really good. You're making higher lows basically the whole way up. This is looking really good. I would expect, just like today, pulling back just a touch. Wait a second. What? Oh, okay. Nope. So today we're opening here. Yeah, this could make sense. This could make sense where you get a little bit of a pullback and go. So this thing could, I would hope that you get a pullback and go like that. If I'm you and you're in this thing, I'm hoping for a down day today. OSTK. What does a dog stock mean? So a dog stock, let me show you an example of a dog stock. What is a good dog stock right now? Intel? What is this one? Intel. OSTK. I'll remember it. All right. So a dog stock is a stock that comes down through the sweet spot. Wait, my face is covering that. Hold on. A dog stock is a stock that comes down through the sweet spot, and then it gets on the bottom and it just goes sideways for a very long time. And this thing basically was under in the oversold area from mid-June through September, and it just popped up here in October. So a dog stock is a company that will basically sit on the bottom, and eventually it's out of favor. The stock price continues to fall on you. No institutions are paying attention to it. Eventually, you'll get a little bit of a turn up, and it'll start to move into the sweet spot, which is good for momentum. That means volume's coming into the stock. That's when big funds will take notice of it, start buying shares. You'll be the first one into it, and you'll catch a very, very good run up. So that's what a dog stock is. OSTK, overstock.com. So overstock doesn't look very good from that perspective. Yeah, for overstock, you're looking fine, but you're kind of getting some narrowing here, but it makes sense. You're just stuck between the moving averages. You tried to pop up over the 100, came right back down. So dog-faced pony soldier. Yep. Hi, Mo, could you please check T related to the decline? Sure. Let's zoom out and just see what we got here. All right, so this is about as bad as it frickin' gets because we are at this. I have this thing zoomed out to 2012, and we are at the level of a low of March 23rd. So we are basically at the lowest point in basically a decade. COVID was the next lowest point. This is such a terrible. So hey, whoever asked that question about a dog, this is a dog. You come down through the sweet spot and you just go sideways and you just sit on the bottom and you just go sideways for a very long time. Eventually, AT&T will come back into play and it'll pop back up. So this is a very, very good example of a dog stock. And who asked that question? Wolfarius. For dog stocks, create a dog stock watch list. Throw them on there. you'll pay attention to them every once in a while, and we'll go from there. What's the difference between a put and a BOFA? Bank of America? I don't know. Facebook is trending down. It's holding. Is it holding any support? Let's see here. Basically, it's trying to hold up above its 200-day moving average, which is 316.86. You have increased volume, very big decline in volume, so this is going to be a tough one. But to short, man, if I'm you, I'm not shorting any fangs. That's just my personal opinion. You do what you want to do. But hey, Seth, WYNN. Every time I look at this stock, I think of Mr. Wynn from Hey Arnold back in the day. Every time I see this one. And it was actually Randy Travis who was singing the songs. Okay, so gap here filled. Gap up here needs to fill. You're getting an uptick in volume yesterday for whatever reason. So good increase right here. Get this thing moving up to the top. And yeah, you'll be all right. Just be patient with this one. Guys, smash the like button, please. Let's see. DBX. Is this Dropbox? Oh my gosh. I don't know this company. Dropbox. So pretty inconsistent volume dating back to like June. I don't love that. It's just hovering above its 200. You know what? In my opinion, you should take this for a little bit of a swing trade. Once it gets into the sweet spot, try to run it up to the 100-day moving average, about $30. That's really what I would do with this thing. If you want to short it below Monday, Friday, Thursday, short it below Wednesday's low, and you can be all right from there. So disruptive. Josh Turner. Is this the real Josh Turner? I bet you get that all the time, especially if you live in the South. All right. Southwest. So Southwest had a little bit of a hiccup, a big hiccup yesterday, actually over the weekend. So we'll see. I would be careful with this one. I don't think I would trust this one yet, especially with all the selling volume. Be careful here. You can see that this thing did try to climb up in price yesterday and pulled all the way back down. So it's challenging its 100. Just be careful here. Let this thing settle down. I would wait till Wednesday to do something with Southwest. See the direction this is all going to go in. Nike, good question. Love Nike. I think I'm wearing a Nike shirt right now. Yep, I am. So Nike dipped down, touched its 200 and rebounded. So I do still think that this part of this gap is going to fill down to $136. But you're going to need a lot of selling volume, and I think that the whole market is going to have to go against you. I don't think that Nike is just going to go by itself. So be patient. Keep it on a watch list. You'll be all right. All right. The real Josh Turner, but not that Josh Turner. Go to response. CCL. Haven't looked at CCL in a while. So CCL, let's see here. CCL's your perfect 50% rule. So you have your high, you have your low, and then you have your middle ground here, about $33, and it just can't break through it. So it got going. It's still an uptrend. Your volume, after you had these 4 really nice days, the volume completely fell off. So if you were a good trader, you would have known that after 4 days, you see your volume fall off. You know that things are going to likely turn, especially if you get a long wick like that. Things are going to likely turn on you, and they did. So keep watching CCL, but that's going to be a very, very hard stock to get going. I don't think the CCL will get going until maybe after Christmas. I would want to see what they report as far as sales going into next year. But remember, CCL has 2 things going against it. 1, they need to get people on ships. That's the challenge. 2, they need to get back to the point where they're charging full pricing to get people on those ships. Filling ships at 50% discounts is not the same thing as filling ships at charging 100% like they used to. So it's twofold for them. Plus, they've done a lot of different it's dilution and this and then they have a lot of. So we'll see. We'll see how it goes. But Qualcomm. So Basically, what I'm saying is anytime you start seeing long wicks and turn around on CCL, take your profits. Doesn't CCL run on oil? I assume that a boat has gas. I don't know how to fill a boat. Maybe some of you boaters can tell me, or some of you that have any idea about an engine. Okay, so this needs to get turned up. You are definitely hitting at some kind of support level here. Oh yeah, I remember doing this one yesterday. 1, 2, 3 right in there. So we're just at some support level. You're getting to the bottom. I would wait for this thing to turn up. I would actually just throw this on a watch list. Maybe throw a tracker share on it, something like that, and you'll be all right. Okay, let's do FedEx. What time is it? A minute and a half. A minute and a half till the market opens. Bristol Myers near 52-week lows. Hey. All right. I like what FedEx is doing down here. This would be a good tracker share. It's moving up nicely. Well, I shouldn't say it. It's not moving up anywhere. It's on the bottom, but I like that the red line has crossed over the yellow instead of it just going sideways on the bottom. So this one could be good, but you are getting, I mean, look at your volume. It's just very consistently fallen off the last 10 days. Yeah. Hey, William, it's all right. I'm sure Bristol Myers does have they have a pretty decent pipeline. I worry about a couple things. They have a couple of drugs coming off patent, one of which they bought from Celgene in their $74 billion acquisition. The issue is that was the main driver of revenue for Celgene. It was called Revlimid. And now they, I think 25% of the patents falling off. So that was their biggest part of getting money from that deal. And if they don't get that, that's trouble. They also have some other drugs that are not working. They also have some other drugs that have failed. They sold off, was it Opdivo they sold off? I can't remember. I think it started with an O. But, yeah, I don't know. What am I looking at next? I'm losing track here. ATVI? Sure. What do you think about Supernus Pharmaceuticals? I have never heard of that before, sir. Or madame. So we're sitting right now at a definite consolidation channel on ATVI. Just trying to hang with its 25-day moving average. Market's now open. Thank you, Simon. So if I was you, I would just be patient with this thing, let it move up. Eventually it will. And I think that this little support channel that we're hanging at is probably, consolidation channel is probably pretty good. All right, let's see what this company is doing with the oil spill. So they ran up, pulled all the way back down 50-some%, and now they're making a little run for themselves. So you know what? I would just ignore this chart because you're not going to do anything long term. I would go right over here and grab this thing for a swing. If it breaks through that 25-day moving average, you have a long way to go here. Just make sure that your volume stays consistent. That's the most important thing. Make sure your volume stays consistent. All right, I will do one more stock. Then we have a lot of recording today. Who is going to be the lucky winner? Who's going to be the lucky winner? VLO, you win. Valero. So Valero doing what all energy is doing. Let's see if they're creating nice W formations, and they certainly are. So that's great. You know what to do here. If you get a brand new high on an engulfment, go for it. And I love what's happening today. I'm so happy to see this pullback. I hope it stays here and goes like that, because that creates that W formation, and hopefully volume stays consistent. Great looking trend going on. Separate. This is perfect. Hey, Nick, if you're watching this, throw this in the ambassador channel. I want to talk about this one. But this is looking pretty good. So what's our bid and ask? 25 cents. Let that thing calm down. Let 10:06 happen, and we'll go from there. Winner, winner, stock dinner. We'll see. We will see. All right, guys, you have a wonderful day. 2 o'clock Eastern time today, live stream. Me, Seth, Pablito. See you there. Peace.